Okay, so today we're working on a new company, and I'm setting it up right now, and then we'll show you some concepts related to business. Okay, so now I'm entering my passwords. This should work. Okay, so now we're going to start to use QuickBooks to actually set up our company. If anybody has any questions, please ask them at the proper time. And that's it. So welcome today to the session, and we're going to start to set up this company. Okay. Okay, I don't need the free website. Okay, start working. Okay, so this is a company now called the ABC Wines Company. The ABC Wines Company is in the wine business. We're going to show vendors to the store. We're going to show shipments. We're going to work with inventory. We're going to do a whole bunch of things. So this is the beginning of the company. Okay, so now first of all, we have vendors. We go to the vendor center. And we're going to say that we have a new vendor. And since the wine business, we'll say that this vendor is called Carmel. Company name is Carmel. Mr. Jim Jones is the officer. So that's the Carmel Company. Okay, Mr. Jim Jones. Okay. Make another new vendor. It's a wine business. We'll say that's the Kedem Company. Opening balance. We'll say that's the Mr. Abe Herzog. Mr. That was Kedem. So now we've set up two companies. One of them is called Carmel, and one is called Kedem. Okay. So that's the first thing. Let's go back to let's close this. Okay. So now, when we have a company, the company actually has employees. So let's create a few employees. And we'll say new employee. Employee is Mr. Ira Smith. Social Security. Gender male. Date of birth is back in history. Okay, that's enough. May 1st, 1990. Makes him 20 years old. 10 years old. I'll go further back. Okay, that's enough. Okay, so this is an employee. You don't need the address. Next, set him up. We'll say that the hourly rate is new. Hourly wages. I'll say he gets an annual salary. And maybe a bonus. So now the bonus is performance. now an hourly rate will be, let's say, $40, and the schedule is biweekly. Do you call it biweekly? The pay period date is, let's say it's every Thursday, and we'll say it's every Thursday. Okay? And we now have an employee. Okay, so now what we've done is we set an employee, Iris Smith. And now we have other things. We have single, allowance is 1. There's Medicare, Social Security. State is New York. Okay. And the state information is also New York. Okay, New York is set up as, okay. New York withholding, next. And, okay. Okay, we'll skip that. Okay, performance, and finish it. So now we can set up payments for this guy. Okay, so now, so set it up. New York Employment Center. Okay. That's the rates. And we finished. Okay. Set that up. Okay. Company rate is 4.5%. Okay, and finish that. Okay, and we say that they are a, okay. We say that they are New York City resident. Okay. And now we have it set up. Okay. So now we've set an employee. So now we're going to go back to setting up how we deliver the wine. Okay? Any questions? Let me just see how many people are logged on. Okay, we have 8 people. Okay. So first of all, does anybody have, okay, so I'm sorry about the crib sheet. I will send out the crib sheet this following week. I apologize for that. Very busy, and I'll send out the crib sheet this week. Okay. 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 So, but I will send it out. The sharing, what happened? Okay. Okay. Share the application. Okay. 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 We lost it for 1 second. Okay. Okay. So now we have the employees set up. And as I said, I will send out a crib sheet next week. Okay. It's sharing. I'll be careful about that. Okay. Yeah, the sharing dropped for 1 second. Okay. So now we go back to the company, the home page. And so now what we have over here is we have the idea of the wine companies are actually going to start sending us wine. So how do we do that? We enter bills. And so what we have is the Carmel company. This is new. We didn't do this the last week. And then we have the idea of, this is again, the business we said is 1% net, that's 30 days. Okay, the U.S. dollar is the currency. The bill is due on the 31st. And we'll give this bill a reference number of 101. Okay, so now we'll go over here, and we're going to say that now we have the idea that this is now, it's none of these things. It's not insurance. but this is actually merchandise. Let me get the right thing. It's going to be, let me get the right thing again. It's going to be merchandise sales. Okay. Merchandise sales. The amount is 50. We're going to have, we'll call it rosé wine. Carmel. I don't have to do anything else. Okay, so now we've created a bill. So now let us work on this bill. Okay, well, let's now expand this bill. So now we have the bill. And we say that we're going to have merchandise sales of Carmel wine, rosé wine. And then we say that the memo, okay, so we have there. And the amount is, we'll say it's $500 of rosé wine. Okay, $500 rosé wine. A new customer job. No, we don't need to do that, cancel that. And this is billable. Yes. Okay. Okay, so now we've set up a bill. We calculate this bill. It's $500. And the bill has been received. Okay, so we can close this. Then we record the changes. Okay, so now we have a bill. So now, when the bill comes in, the bill has to be paid. So over here we have a bill. And the bill is for $500. So let us say we'll pay it on the 31st, as recommended. So that's the bill, $500. The discount, we don't have a discount because we're doing it. And we have a check to be printed on that. So now we've actually presented a bill. So we have the bill, and now we will pay it. Also, very interesting. Even though that we're doing this in dollars, this is a foreign company. Carmel is in Israel. So we have what's called pay foreign vendors. So it says make international payments quickly with QuickBooks. We won't do this, but the idea is that for low transaction, $15 foreign currency-wise and competitive rate of exchange, QuickBooks will actually do these payments. We don't have to do that right now, but just showing that to you. Okay, so let's get back to this. Let's close this. Okay, so now we have a bill, and we paid it. Okay, let's show all bills, and we paid it. Okay. Okay, and the bill, and so it says is the bill which is going to be paid on that. and print the checks. We won't do that, but the bill is not paid. So that's the idea of creating a bill and of entering the bill and now actually paying the bill. Any questions about that? So what we recommend, what we set over here, we set up two companies, Kedem and Carmel. Now we're going to enter another bill. And now the vendor will be Kedem. Mr. Abe Herzog. Terms are, again, 1% at 30 days. And then reference number is going to be 102. And we'll say that the amount is due is $600. Okay? And the account is, again, our merchandise account. Let me find it again. Not professional fees. It's the merchant account fees. $600 is billable, and it's an amount of $600. And the memo is that this is $600 since we're dealing with Kedem. For instance, we'll say we'll buy $600 worth of grape juice. And we'll buy also $1,000 of Kedem champagne. Okay. So now we have the idea. And the previous bill, assign an account to this transaction. Make another thing. Of $500 of regular wine. Now we'll close it. Okay. We calculate it. Okay. And now close it. And we record it. Okay, so now we have two bills. And then we'll go to the pay bill section. And we'll say that we want to pay Kedem. And this time, we'll pay them by check. But this time, we'll actually set the discount. We're just going to pay them earlier. So pay them at 11. And discount amount is merchandise sales, or the merchandise sales, and done. So now we have a little bit of a discount. Because originally the bill was $2,100, and now we actually have a savings. So this is the idea over here. The idea is we set up bills that the vendors are sending us. Then we set up a process of actually paying the bills. Any questions about this? Okay, so this is the business here of selling the wine. Okay. Okay. So let's go back to the main company. Okay, we'll close this. Okay. Okay. Sent the checks. Done. Okay, so now we've entered bills and we paid bills. And now we have to go into the idea of sales. So in our sales, we have individual sales. I'll go into that, but I just want to go through one other thing. So over here, we have the idea of the sales tax payable. That's zero. Over here, we say that the original bank now is minus $2,579. Let's go back to the bank. And we'll make a deposit. We'll say that since we start on the 1st, we'll say that our nice, remember we had our nice, the person who helped our business. So we receive from a new person, Mr. We'll be at a new person, a friend. Name is benefactor. AB credit. Mr. A benefactor. Okay. So now we have from accounts, Citibank. Okay. And he'll say that he wants to deposit with a check. He wants to deposit $15,000. He's our good friend, and he's setting up our business. And the cash goes back to the Citibank bank, not to the Citibank. Okay. And the cash goes back to the members' equity. Okay. And so that's how we did it. So Mr. Benefactor actually has transferred $15,000 into our account. So now, going back to what we saw before in the previous week, let's take a list and look at the list of how the company's doing this time. So what we can see over here, just for the beginning, is we can see that we have we'll take a look at the bank information, at the exchange gain. We'll look at Citibank first. Okay. I'm not searching. Okay. No transactions for Kedem. No transactions for there. But we have a transaction for Mr. Benefactor. Okay. So that's the idea of working with the bank. Cancel that. So now we have the idea of the bill payment, and we have the bill payment to Carmel, the bill payment there, a balance, and we'll figure this all out later. Okay. So this is the idea of working with the bank. Okay. So now let's go back to the main company. Are there any questions? Let me look. Okay. The recalculating button is used, for instance, if you change the amounts in the bill, then it will actually redo the calculations in the bill. That's what it does. Okay. I hope that answered your question. No. Okay. So now we have the idea of so now what we've done in the picture over here on the screen share. We've entered the bills and we've paid the bills. Now we'll start to actually create the processing. Number one, we'll start to accept credit cards. To do that, we do that over there. We say that they'll learn more from accepting credit cards, and so that's how we set up last week. Okay, so now close this. That's back employees. Close that. Cancel. We're in the company. Okay, so now we have our sales tax and everything, and now we'll start to generate some reports. Okay, we don't have any sales tax paid, but we'll have to set that up. Okay, so now we'll start to set up some of the sales. So that we need customers. Okay, so now our customers will be set up. First of all, we're going to have two types of customers. One will be a wholesale and one will be a retail company. So first of all, we'll have a new customer. A new customer will be called the Young Israel of Manhattan. They have an opening balance of $100. Company name is Young Israel. Contact number is Mr. Sam Goldstein. And then, okay. So we set up a new company. And the new company is going to be a company which is going to buy the wine. So let's make a new transaction. And what we have is they're actually going to have an invoice because they're buying the wine wholesale. So the invoice to Young Israel Manhattan, and the quantity. Okay, so we have, first of all, they don't pay sales tax into the shul. The terms are 1% on there. Representative is a new. Okay, the salesperson's name is Mr. Ira Smith. Okay, IS, okay. Okay. Via Federal Express will ship our wine. And it's FOB. FOB means freight on board. The freight on board means that the freight is considered to be delivered to the person at the time it's put on the truck. And then the seller takes full responsibility until it arrives. Okay. So now we bill to the Young Israel Manhattan. And we're going to send a quantity, we're going to send, let's say, 100 bottles. Okay, non-taxable. Okay. Price of each is going to be, we haven't created price levels, so we'll go back to price levels. Okay, we'll go back to price levels first. Got that. Let's close this. Okay. Close. Okay, we have a bill, but now let's go back to setting up price levels. I forgot that. Okay, so now we have price levels. Okay, the price level is going to be new. Okay, the price level is going to be wholesale. Okay, the price level is fixed, and the price level decreases items. Okay, so now we've set a price level of wholesale. Let me correct that. It's not wholesale, it's wholesale. Okay, okay. So that's the wholesale price list. Okay, okay. 1 second, I have to go to the bathroom. I'll be right back. I'm back. Okay, so now we have the wholesale report, the wholesale. Okay, we'll go back into the price list, and we'll say a new price list is going to be retail. This is very common in all companies to have what's called a price list on retail and a price list on fixed. So any questions on this? So now we've created a price list. Okay, we'll close that. Okay, so now we then will have another customer. So we had the youngest of Manhattan, and then we'll add a new customer in the job. The new customer will be Mr. Israeli, and he will be buying the wine retail. There's no company name. Mr. S Israeli. And let's say he has a $10 balance. So that's his address and mistake, but we'll leave that alone. And now what we'll do is we create some new transactions. Okay, so previous one, Youngers of Manhattan, and what we have over here is description of sales, but non-taxable item. The description will be that the person has bought the wine, the grape juice, and we'll say that the grape juice costs $6 a bottle, and so the amount is going to be 100. Okay, I should recap. Okay, so the amount is, and then we'll say that it'll be, and it's printed or emailed. No tax in this. Shipped to the Young Israel. Okay. Okay. It's into a product invoice. Save and close. Okay. So now we have a transaction to the Young Israel Manhattan, and they are buying some of our product. Okay. So now we'll have a new transaction for Mr. Israeli. Okay. So over here, Mr. Israeli is actually going to have a sales receipt, and we're going to have a new transaction, sales receipt. And so, do not display this in the future. Sold to, let me close this. Customer job sold to Mr. Israeli. And what they're buying, they're going to buy sales tax item, local tax. Okay. They're going to be buying, not local tax, they're going to be buying also some grape juice. And they'll be sending us a check. And taxes, quantity is the amount is going to be for $40. So tax it. Okay, and we have local tax. Local tax. And now we have to see what that is. Okay, that's the local tax. And the tax code is, okay, and save and close. Sales tax item. Sales tax name is New York City and state. Description is sales tax. And the rate in New York State, I think, is 8.5%. Okay, Tax agency responsible for. If you don't need that. Okay. So let's say we select that for Carmel. So now we have the tax rate. So now we have the grade 2 set up, we have the selling of it, and we save and close. Any questions about that? So that is the idea of the sales receipt, and then receive the memo, refunds, and everything. So what we're doing over here is we're showing the operation of a store. Again, I asked in the last class how many people are in the retail business. This is exactly the methodology that you use for retail businesses. Okay, do we have any questions? Let me take a look. We have no questions. Okay. Okay, everybody sees the screen. Okay, very good. Okay, so we have now the sales receipts. We have the payments, refunds. Okay, so what happened is that refunds. What happened is somebody bought the grade 2s and then they don't want it, so bring it back. So let's make a new refund. So Mr. Israeli took his grade 2s, and what happened was he wants to return it, including the sales tax. Okay, so he spent $40. Warranty was $40. Customer message: the pleasure of working with you. Okay, and now we'll say that he returned, got a refund of $40. He returned it. I'll give a refund. Okay, and the refund is $40. We'll give him a check. The memo is, thank you for the business. Okay, so now we have a refund. So what I've showed you is both buying wholesale, buying retail, and getting a refund. Any questions about any of these things? Okay, so let's close this. So here's our sales receipt. Save and close. I'll just clear it. Save and close. Okay, so let us go back to the company. So now we have sales tax, which we showed over here. Sales tax payable $40. Accounts undeposited funds 710, and so we're actually starting to develop the company. So let's go back to our lists. Okay, so we have the chart, up window the chart of accounts. Okay, so let me do one thing over here. Okay, since we've been using the company for a little bit, let us go where I showed you the outside is actually saving a company, a copy of it. So we're going to create a copy of this company. Tell us where your backup should be. is going to be on the C disk. It's going to be on the Documents and Settings, Administrator, okay? And it's going to be called the ABC Wine Company. Okay? See, the QuickBooks likes you to save it offline. They always have a place to put it. But what we're doing is we're actually saving it locally. Okay? And we're saving it. Is this location? And here it goes. So what it does is it's verifying that the backup. We backed up our data now. Okay, so that's the backup. Okay, so let's close this. So now, what we're seeing over here, this is the operation of the company, and the company actually is done over here in all the detail that we have over here. Okay? Okay. So now, we'll actually start to go into the items and services. Okay. So the items are new. What we have over here is we have we'll cancel this for a second. We have again the sales tax, the activities, create sales things. Oh, I just want to show you the report. This is the report. It's a quick report showing that from January 1st to July 1st, 2010, one of the sales we had was an invoice we sent out to Youngers in Manhattan for the grape juice for $100 and $600. Okay, so that's that. And so the reports are always available for you to see. Okay. So that's that. Okay. So now we're going to see the following. We're going to go back to our list. And we'll go into what's called the currency list. Okay. The currency list is important because remember, the currency list that's the Israeli companies would be the Israeli shekel. So let's go find the Israeli shekel. Okay. So one of the companies will be the Israeli new shekel. Okay. So that's the format. As of the date, July 1st, the exchange rate, I don't know if it was true, but let's say it's 4.2. Okay, so that's the Israeli shekel. Okay, so that's the setting up of the company. That's the setting up of the sales tax. The setting up of all the things. Does anybody have any questions on anything that we've been discussing? Actually, there's no questions. Okay, so now we're going to go into, again, the chart of accounts. So what we have over here, for instance, is we have undeposited funds. Okay, we'll put that. We have our Citibank Bank, and we have the sales tax payable. Okay. So now what we'll do is we'll go back to the paying the bills. I'm going to say show all bills. No bills are there. And we'll say that, for instance, we'll make a new bill. Okay, that's paid. He's paid. And very nicely, QuickBooks, when the bill is paid, it stamps in the record as paid, so there's no confusion. Okay. Next. Okay. Now, okay, so that's those are the old bills. Now we'll say we want to make a new bill. Say that Kedem, the merchant account, again. And let's say the bill now is actually going to be shipped on July the 27th, due then. And the amount is going to be for $1,000. The memo is for, we'll call this premium wine. The customer job will be for the Youngers of Manhattan, and we'll say it's billable. So now we have scheduled for the future a payment of $1,000, or a shipment for $1,000 for the premium wine that's going to be delivered to the Youngers Joe. So save and close. Okay. Okay. So that's the bill. So that's the bill that they have over there. So that's the bill. And in order to make, so that's the $1,000. Okay. So now we'll say that we create an advance. We're going to create a sales receipt. Okay. A sales receipt in the future to the Youngers of Manhattan, where it's going to be for actually in August the 18th. And it's going to be for non-saleable, no sales tax. We'll say out of state, no sales tax. And we'll say that what they're buying is the premium wine. And the quantity will be now 11 premium wine. And now the amount okay, and it will be the premium wine There's no tax. It's going to be 100 bottles. No, it's going to be, I made a mistake. It's going to be 60 bottles of the premium wine, and the rate is going to be $12. So what we've done, actually, we'll make it more. Since we had $1,000, we'll make it 100 bottles. So now we've actually made $200 profit by selling the wine that we purchased from Israel to the young Israel. We actually now have made $200 profit on this. And save and close that. Okay. So now what we've shown you is creating a bill, creating the payment, and creating the vendor, and creating everything over there, and it's shown like that. Okay, any questions about anything? Let me open the questions. Okay. Very, very interesting here. What does 1% of 10? What was 1% of 10 net 30 mean? Okay, this is a very basic business concept. The idea is when you have a invoice out and you make the sale and the person receives the item, hopefully very quickly. So then what happens is they have 30 days to pay the bill. So there's a common thing in the United States. We'll put in the cost of shipping in a second. But the common thing in the United States is that if you pay within 30 days, you can actually get a 1% discount. That's what I mean, 1%. That's 30. That's what I mean. Okay. So in the where do you put in cost of shipping? That would be in the sales receipts or in the invoices. So for instance, let us take a look at an invoice. So we just created a sales receipt for that record, but we created an invoice. So we'll say that we have an invoice to the University of Manhattan, and this is going to PO number 1012 via, let's say it's going to be sent to by DHL. Trade on board is yes. Okay, so we're going to have description, a premium wine. Again, another shipment. This will be later. The price again will be item code is non-taxable, and it's going to be the premium wine. The price will be again wholesale price. This will be $12. And then they will take the amount, let's say 60. And this will be a sale, which will be on the 8/18, and save and close. Okay. So that's, I forgot to put in the cost of shipping. Let me get back to the invoice. Okay, so now over here, let me show you how this is done. Here's the invoice. Let me move this way. Okay, so here's the invoice, and the invoice IS, et cetera, et cetera. So now the tax is out of state. We have to there was sale of premium wine. I made a mistake over here. Let's say it's not 60 units, but it's actually 90 units of wine. Let me correct that. So we're buying 90 bottles of this wine. Okay. So now we'll say okay, by DHL, and now we add time and cost. So this is time and cost that we are rating it. So what are the time and costs are? Number one, okay. So now we have an expense. And so we do is mark up the expense for merchandise sales. What do we have over there? We have the mileage, and we have items. And what we do is we can actually add an item over here for time. So this is how we actually add the items for the billable time and cost. So in the billable time and cost, we can actually add the cost for the sales. Well, any questions about that? Okay, that's how we add the sales by choosing billable time and cost. Okay? Okay, so that's the idea. So that's the idea of creating the bill. Okay, and again, just to say at the very bottom over here, just follow my arrow. Again, QuickBooks is advertising all the payment processing and online invoicing solutions. Okay, we've gone over that last week, but that's very important to know that QuickBooks is always ready to stand behind the customer. Okay, any questions about that? Okay, let's go back to some of the lists. So now we have the customer type list. So now the customer types are from advertisement, referral, retail, and wholesale. And the customer type lists are create invoices and item lists. So those are the customers. And then the customers have statement charges. And again, we enter the time, change price items. And again, there on the bottom is again the PayPal payment wizard, as we discussed in previous class. So that's now part of this QuickBooks program. Okay. So now, okay, checks. Okay, interview complete. Return to form. Okay, so now we say that Mr. Israeli, he wants to send a check, or actually cash, and he has no bills outstanding, so we don't have to do that. Okay. Okay. So that's the idea of sending up bills. That's the idea of doing it. Okay. Now let's go back to our reports. Okay. First of all, just one question that I have to ask to everybody. How many, again, of you are in sales? How many people here are in sales or retail situations? Nobody answered. Okay. 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 So now, what we're going to start to do is we're going to start to show some of the reports that are based upon these sales. Okay. So now we have the sales by customer summary. So there's none of them. There's actually only Manhattan. All the sales. That's Youngers of Manhattan. Okay. So that's the summary of sales. And now we'll go to another report. We want to have a sales by customer detail. So then we have the Youngers of Manhattan has a sale wearing the first of the grape juice. Okay? And now we can actually say, let's look at the sale in the future. So now we can actually see additional sales. So now we should actually be able to say additional things. Refresh. Okay, so those are the sales that we have. Okay. Okay. And then we have our sales by customer summary. We create the invoices. And we explore again the workflow. Okay. Okay. So any questions about anything that we've discussed over here? Okay. So now So now we'll show you a few things more. Number one, we have statement charges. The statement charges, let me move this. Oh, the statement charges are the opening balance over there, the check that we received, the credit number that we paid. So this is the statement balance. Again, we can edit the transaction. We can add time and cost, and the expense over there. For instance, this is where we would put in the costs for doing the shipment. Show the open balance. Okay, so this is the record of how our company's doing it. The customer type list, the wholesale, and we'll actually edit the customer types. Okay, we'll cancel that. And that's Mr. Israeli, that's his business. And then we'll go to Youngest in Manhattan, and we'll see their business that they have over there, including the future items that are available for shipment. So this is the idea of setting up the business. This is the idea of collecting the sales tax. This is the idea of putting everything together. Okay, so now, after we set this up, we'll now show you a few more things. So now, over here we have our sales tax items. The youngest of Manhattan, Mr. Israeli, the other person. And so this is the idea of setting this up. Okay. Now let's get back to our employees. Okay, we have Mr. Ira Smith, who's a salesman. And now we'll say that we'll look at the payroll detail. So far, we haven't scheduled any payments for him. So now we'll start to schedule some payments for him. All right. That's our sales representative. And now we're going to actually start to pay him. Okay. To pay him, I'm not going to do this in reality, because I would suggest in this particular case that we're going to actually use QuickBooks to pay him. So I'm showing that set up. Again, over here, this is QuickBooks. QuickBooks would handle the payroll taxes. Right? So that's the idea of setting up the payroll. Okay. So we have one more class next week. So in the time allotted, I'd like to have some discussion. So we'll open up the questions. What are some of the topics that you want us to finish with? Let me open the question. Okay. What are some of the topics you want to discuss next week in the last lesson of the class? Okay, so don't sit on your hands. Please ask some questions now. Nobody has any questions for me about the topics for next week? So let me suggest a few items that I want to discuss next week. Number one, I want to discuss the concept of how you refill an inventory. In other words, when the companies, use the company that we have over here, when the companies are shipping the product, actually they actually then ship the product, and then they ship more products, and then the sales people are selling the product, and then what happened is that at some time in the middle, you have to be concerned about how do you replenish your items that are on hand. So this goes back even to Isaac Newton had certain theories about that. And so the idea is there an optimal way for you to actually schedule the reception? Okay, so that's he wants to they wanted to chat with me now. I don't want to chat with them. No thanks. So the idea is, how do you actually set up the payments and set up the inventory so the inventory flows very nicely. Another subject that I'll also recommend next week is the use of EDI. That's electronic data interchange. That's used with a different model of QuickBooks. Actually, EDI is very important. I have some articles about it. Maybe I'll send some information about that. And this is particularly important in healthcare, in manufacturing, and other long items. So that's I put that down. Again, inventory items about replenishment, and again about the use of EDI. Also, I would say that we have to go a little bit more into the tax. I'm not an accountant. However, as I said before, I have relatives who are accountants. We'll go deeper into the use of the tax system, because reading in some literature, accounting is actually very nice, very, very, very good business. However, sometimes you have the problem that you have two types of things which are on top of you. Number one, we have the whole accounting industry. The whole accounting industry has set up tremendous amounts of codes based upon governments. The federal, state, and city governments have tons of codes that the accountants work with. And also the tax authorities also have tons of codes. So again, that's why you let Intuit actually help handle the payroll taxes, because otherwise you need an accountant and yourself to do it. So in other words, you have the idea that Intuit can do it, or your accountant can do it, or if you want to manage it yourself, that's in the middle. Okay, so that's the idea. We have inventory, and we have taxes. Another thing that I will also go to next week is to actually understand how you have employee benefits. We haven't really discussed that, but it's a very nice idea that QuickBooks can be set up to actually do the employee benefits, and so the employee benefits are very important in the use of the company. Okay, a few other things that I want to discuss include the following. Let me get my list. Okay. So again, I said the economic order quantity of Isaac Newton will do that next week. How to break even formula. Also, I will discuss repaying a loan. That's very important. And I'll go deeper into the subject of working. Remember, I had that Mr. Benefactor who's actually paying for the use of for the starting of our company. Next week, I'll actually show how Mr. Benefactor is actually being paid back in detail. So I'm writing that down. Paying back Mr. Benefactor. Another topic which I'll also discuss is the payment in foreign funds. We had a hint about that today, but the payment for foreign funds is very, very important. Okay, we have about 15 minutes left. I'll also discuss the following ideas over here. Number one, how to we showed how to sell a depreciable asset, so we understand that. And I'll also try to develop some ideas about job estimation. Job estimation is a very important thing because when you have your employees and they have pieces of work to do, how do you estimate the process of doing it? So that's an interesting thing to work on. So that's job estimation, building, and tracking. And then again the reports. Again, we will go through an overview of all the reports that we have. Okay. Are there any questions? Any other questions that you have now? Okay. So now I want to discuss the following thing, which is very, very important, is that when you set up QuickBooks, you have to have somebody who's computer professional. So don't ask me what a computer professional is because I've been using computers already for over 35 years, maybe even closer to 40 years. But so the idea is, how do you set up the computer? So the computer, when it's set up, has to be set up with QuickBooks on it. And I've installed QuickBooks myself. It's easy to install. You install QuickBooks, and then you actually have to enter everything correctly, as I've been trying to show you. So that's the use of the computer. You can't be afraid of the computer, and you have to then find somebody who's useful for you. Another thing which is very important is that QuickBooks is a very nice solution for small and medium businesses. Sometimes you can grow out of QuickBooks. If you grow out of QuickBooks, I would discuss it with your accountant because the accountant can have other ideas for you. Particularly if you're in a profession which has a professional membership, then actually you can actually see you can see that the professional membership will actually help you get involved in those professional things. So that's the idea of working with professional group. Okay. And the last topic that I'd like to mention to you is the idea which is called the KISS principle, which is called keep it simple. Okay. It doesn't pay to overindulge and to spend too much money and to actually calculate things. If you keep everything simple, you keep your separate lists, you keep your separate checkbooks, you keep your accounts clean and accurate, and then everything then works out. So the idea is, as my brother, a CPA, has told me, that you have to work simply and you have to understand the financial arrangements that you're working with, and then you actually can then go through the minefield of making sure everything works correctly. So in this area, you have nice lawyers and you have other people who actually help you move through these complicated affairs. But the main idea is to keep it simple. Just a word about my family of CPAs, just to understand that. My brother made Aliyah a number of years ago. He now is the controller of a company in the Galileo that manufactures glass. My daughter is on the controller staff for a non-profit company up in Westchester. And my sister works in the financial industry down here in New York. So those are the accountants that I have in my family. Okay, so in the last 10 minutes, I want to know if there are any other topics that you want to discuss. Okay, I'll just send that as a question. So please send any topics that you would like to discuss. Okay. I just sent that message. Okay. So now, the last thing that I want to discuss is that when you have QuickBooks, QuickBooks is a very basic program which actually helps you to run the business. So with QuickBooks, you can automate, as I show you in the companies that we have over here, all the processes that you have. So you have the processes. Let me go back to that list. Let me move this over. I'm closing everything I did before. So again, when you have your QuickBooks running, then you can set up all the systems that have in your company. You have the idea, again, the bills, the invoices, the statements, the enter time, the learn about payroll options, the refunds and credits, the chart of accounts, the items and services, customer manager online, the reconciliation, the write checks, the check register, and print checks. Okay, and the last minute I'll also show you the customer manager online. Very interesting concept. Again, this is one of Intuit's services. Again, I am not a stockholder in Intuit, so don't worry that I'm making any money off of that. Okay, let's get this set up. Let me. It's not. No. Okay, that didn't work. Again, the last thing I'll show you before we quit today is when you have QuickBooks, you actually have a tutorial. We haven't used the tutorial, but I'll just show you this. This is a tutorial for using QuickBooks. And this is the tutorial that you have in using QuickBooks. And it guides you for there. We don't have to listen to the audio, but it just shows you how you do everything, basically, as I've been showing you. Yes. Okay, so that's what it's doing over here. I'll stop this. Okay, so the QuickBooks overview and setup has, number one, getting around QuickBooks to 5.56 minutes. What QuickBooks can do for you for 3.43 minutes. Overview of QuickBooks accounts, adding using QuickBooks accounts, items, products, and services you sell, online banking part 1, online banking part 2, multiple currency reports. Again, a complete QuickBooks manual there, and connect with other QuickBooks users to ask questions and advice. Okay, so that's the overview and setup that you have. Okay, so again, send in all the questions that you possibly have, because the course ends next week. So that's that. So again, in the last 5 minutes, I want to just tell you that I've been very happy teaching this course for you. Anybody who's contacted me, I've tried to get back to them very quickly. We're still trying to figure out what happened to session number 3. And again, any particular item that you want to discuss with me, you can discuss with me for now in the future. And the ideas that we have over here then will help any business that you're working with. Again, we have 5 minutes more, so just say very happy to, as I said that, very happy to do this. And again, one of the things which is very nice about QuickBooks is it's not a very expensive program. Again, I paid about $111 for my copy that's on my computer, in my briefcase, and so it actually helps you to do these things very nicely. Okay, so I think we'll finish. We'll finish in about 2 more minutes. Again, the last thing I would say is that in the area of professional work, accounting is actually one of the very nice topics to get involved with. As I told you, my family's been involved with it, and it's a very nice project. Again, in the United States, accountants are professionals, and they're paid fairly well. Okay, so the last thing I would say before we quit is that when we study accounting, one of the things also very important, and then this will finish the last word I say over here, that I'm looking at the QuickBooks for Dummies of the chapter 21, almost the 10 secret business formulas. I didn't want to go too much into that, but I'll discuss a few of those secret business formulas next week. Okay, if there are any more questions, please respond. Otherwise, I say that we're finished. Again, Shalom Aleichem. Everybody should be well. Good Shabbos to everybody. And I think we're finished. Okay. Any more questions? Okay. So we'll stop here. Okay. Okay. No more questions. Okay. Thank you again. And that's it. Okay. So bye-bye.